My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little money. My job is not just to entertain you, but to educate, teach you. Put this like today, there's some context. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. Oh, I had a real busy day today. I spent all day hunting the bears. Yeah, the ones who scared so many people out of the market all week. You know, the bears who said the Federal Reserve were too hawkish, so you had to run. The oh-so-loud shorts presented themselves as elder statesmen, pronouncing that this market was far more dangerous than you think, and you were being complacent if you owned anything at all. And then I realized those bears only come out on bad days. That's why I couldn't find them. The days when they get to look like geniuses. See, they go into hibernation on days like today, where the Dow gained 331 points, the S&P surged 1.89%, and the Nasdaq soared 2.66%. What's the real reality here? Simple. We've been in this real nice bull market ex-tech ever since the dollar peaked, along with bond yields last fall. But this whole move has been hidden by the smokescreen of mega-cap techs, which, well, was awful last couple of weeks. Today was a nice day, though. Today, yep, instead of throwing tech under the bus like the bears want, we actually saw new companies, new life in companies that reported tremendous quarters. I'm talking about things like Netflix. More on that later. Or announced big headcount reductions. I mean, monster ones, like Alphabet. I guess it was a feel-good session. So as we go into next week, I hope you'd stay open-minded. Don't let yourself be scared out of your wits by all those traders who love to whipsaw us with their relentless negativity.
The House of Pain.
Believe me, they are the ones who got today. I don't feel bad for them. It's kind of like a mass thing, you know? Every time we get a couple down days, they come out of the woodwork and act like the world's ending, scaring you. As I told you on this show most of the week, do not listen to these Cassandras. Sorry about that Philadelphia accent, but there's a big game Saturday. Now, take Monday, when we hear from Adobe, a stock that's plunged from $550 last year to $356 today. I think the stock is as despised now as it was loved back in the old days. But Adobe, of course, now it's much lower. But Adobe presents on a sell-side investor meeting on Monday. And if it can talk about disciplined growth going forward, because it made an acquisition a lot of people aren't too crazy about, I think it can make up a lot of lost ground. I have to tell you, if it doesn't, then here's what's going to happen. You know where you're going to be? You know what your address is?
The House of Pain.
All right, let's keep going because I'm really all fired up here. Tuesday, we begin the part of... I'm fired. You're like having a gin and tonic. I'm like working. You get to the part of earnings season I loathe, where so many companies report each day that it's impossible to keep track of them, and I do my best. I always feel like what they're doing is trying to give me a... First, there's General Electric. That's right, which will probably try to show us why we would want to be in its energy division. That's the next spinoff after healthcare. But all we really want is the booming aerospace business. All in good time. Troublesome. We have 3M. My dad used to rep 3M. Even the 3M book games, wow, they sold a lot of Scotch tape in his time. And now, though, 3M, it doesn't look like that at all. It's a stock that's truly going down the litigation rabbit hole. Feels like they've got nothing to really offset the lawsuit morass caused by groundwater pollution and their earplugs that cause hearing problems for combat veterans. The best thing I can say about 3M now is that it yields nearly 5%, but that's not enough reward. It doesn't compensate you given the level of litigation risks. Next, we got one that I think is just a true bargain. This is J&J. Chapel Trust owns it. If reports anything good on Tuesday, I bet the stock will fly. Remember, J&J is splitting off its consumer products business, so the remaining company, which is pharma and medical devices, can shine. I think this $168 stock, I'm saying it right here, right now, could be worth $200. Don't be dissuaded that it acted so badly this week. Look, we had a gigantic rotation out of healthcare, of which J&J is position number one, and into tech. Now, here's one. We have Union Pacific as well, and that's going to get put on a clinic on the state of American commerce. And then after the close, we learn whether those layoffs Microsoft announced this week are grounded in disappointment or prudence. Also, after the close, we know the Fed wants to see real devastation in housing before it stops raising interest rates. They want much lower prices, okay? Will giant home builder D.R. Horton play ball with that thesis? We're going to find out. They're going to tell us straight. Believe me, if they say that housing went up another 20%, you're not going to get a quarter point. You're going to get a full point over the course of the year. Wednesday, we might get Boeing. Well, get this. I mean, I'm not making this up. It might have its first good. I'm not kidding. I mean, like, I know probably people thinking, like, I'm looking at my executive producer. She thinks I'm joking. I'm not. I think we can get Boeing's first good quarter in ages. Stop laughing. I think we'll hear about orders galore, including from China. The stock's certainly trading like there's a good quarter ahead. I'm fanatical about the railroads.
All aboard!
And that also includes Norfolk Southern. Remember, we want to rely more on private sector's facts and rely less on government statistics or fictions, and certainly from the talking heads of the Federal Reserve, who, like, I think why you would want to be on the Federal Reserve is because you want to come on TV so that all your relatives see you. I can't think of another reason. Anybody have one? You in the back. I thought your hand was up. Thank your lucky stars these officials are in their blackout period where they can't talk. My God, can you imagine if we had a blackout period 364 days a year, how easy our lives would be? After the close, we get results from the newly controversial IBM, which has been hit with some contradictory analyst reports this week. I like it going into the quarter because it's relatively defensive with a tremendous 4.7% yield. That's pretty good. Then there's no yielding. How about ServiceNow, okay? These are companies you buy on growth, not on yield. And this is perhaps the most aggressive of the cloud plays. I expect them to tell a story of new contracts. Phenomenal growth. Phenomenal! But will anyone listen? I don't know. They sure didn't care last time. Between Adobe's Fireside Chat on Monday and ServiceNow's quarter on Wednesday, we'll find out if these beaten down enterprise software stocks can find some adherence this year. They sorely need them. Tesla. Oh, my. Tesla's conference call used to be the highlight of earnings season. Fantastic interplay, back and forth, some funny things, just entertaining. But now it's nothing more than the ramblings of a great manufacturer who's being sued and bought some company he really probably didn't want. And this time he might have to explain his card discounts. Plus, I'm sure the shareholder base isn't thrilled about the insane price that Musk did pay for Twitter, which has caused him to sell tons of shares in Tesla. Suboptimal. Next, we currently have a semiconductor glut of massive proportions. So who knows where we stand in the semiconductor cycle? How about a company like Lam Research? Because they make the manufacturing equipment you need to produce chips. They always know. And by the way, Tim Archer, CEO, he always tells. Thursday. Wow, here we are already. That kicks off with Dow Chemical. Now, we know well, we just call it Dow now. We don't call it chemical. It's Dow, all right? Now, we know fellow chemical traveler PPG soared today, up $7 or almost 6% when it didn't disappoint. You know what? That tells me this cohort, including Dow, with an almost 5% yield, has a really low bar. Seems like a buy to me. It's astonishing to me how so few people care about a $362 billion company that's in your wallet named MasterCard. Maybe you've heard of it. But this is an incredible repository of spending data. By a well-run company, too. It should have a strong forecast. We are from Southwest, symbol LUV, but it should be symbol HATE on Thursday. I want to know if management's heads were going to roll after that holiday season fiasco. This used to be one of the best run airlines. Not anymore. After the close, we find out how far away Intel might be from turning around their core business. Is the inventory glut of processors over? How about the newfound glut of chips that go into high-performance computing for the internet? Even though Amazon's spending a fortune building that out, I sure hope we find out more. I want Intel to do better because otherwise this one can still hurt the whole market. Even as Intel's a lot less important than it used to be. Intel outside. Finally, Friday rolls around. And we get results from American Express. I'm a member since 1981. Many bears have turned on American Express. They think it looks like Discovery or Capital One. I don't carry that stuff in my wallet. You got that in your wallet? American Express is in my wallet. It's got far less credit exposure. To me, though, American Express is terrific. Life is too short play. Remember, that's our whole series we've been doing that no one's even focused on except for me. I think this one could surprise to the upside. Ben Stoto has helped me write it. I think he thinks about it, too. Life's too short. People are going out. It was my thesis for the week. You can Google it. Chevron, the first of the mighty oils, and I bet it produces decent set of numbers. Can I go crazy about the stock up here? No, but if oil spikes above the 90s, you bet I will. The packaged goods companies have been lost in the shuffle/wilderness because there's a sense that we might not need to play defense if the Fed doesn't tighten as much as previously expected. So we hear from lowly worm Colgate Friday, but I wouldn't want to go with that one regardless. I prefer fellow dividend aristocrat Procter & Gamble after the rotation out of the group. Remember, the essence of good money management is diversification, so you need some exposure to this industry, and Procter's the best of the best. It's why my Charitable Trust is building a nice position in the Cincinnati Giant. Here's the bottom line. It's a pivotal week. First of 3. Be on your toes. Listen to the calls. Don't take any action unless you're certain. It's very hard to be certain about anything that's just reported. That's me being on my toes with my $79 Rockports that look like $200 shoes. All right, let's go to Trey in Texas. Trey!
Hey, Jim. So in an effort to become more diversified, I've been shifting into alternative assets lately, specifically vintage Pokemon cards. And I wanted to see if you think eBay could capitalize should this become a market trend.
Well, I think you might be early on the vintage Pokemon cards. I'm just saying, one man's opinion. I don't know. I'm looking around. People think you might be early. I think eBay's okay. It's kind of a bit of dud. It's very inexpensive. But the problem is, it's been inexpensive for years. Have you thought about, I don't know, like maybe like Matisse's or something? Those are still popular. That Cezanne, he's good. And Jackson Pollock, I'm a saver of those things. Anyway, it's a pivotal week. Andy Warhol, too. This is Campbell's Soup Cans. Don't take Mountain Shut Red. Don't take any action unless you're certain. And remember, it's very hard to be certain about anything that's reported instantly. On Man Money Tonight, we're continuing our series on the post-COVID rebound by taking a closer look at the e-commerce space to see how it held up in the reopened world. Then Netflix soared today after earnings. But there's one thing everyone got wrong about the darn thing. And I'm going to reveal it, so you better stay tuned. And Huntington Bancshares reported top and bottom line beat earlier today. It was not based on Bitcoin. So what was behind the quarter's strength then? I'm checking in with the CEO, so stay with Cramer.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.